Part 3, Credit Management Policy and Procedure Guide. In the first two parts of our series, we discussed the challenges businesses face with their credit management practices and explored actionable strategies to correct these issues. Now, in Part 3, we will focus on developing a credit management policy and procedure guide to formalize these practices effectively. Why you need a credit management policy. A credit management policy serves as a framework that outlines the principles, guidelines, and procedures your business will follow to manage credit effectively. It provides clarity to employees and customers alike, ensuring consistency and transparency in credit-related decisions. Components of a credit management policy. 1. Credit assessment criteria. Define the criteria for assessing the creditworthiness of new and existing customers. This may include credit score thresholds, financial statement requirements, and trade references. Example, a manufacturing company sets minimum requirements for credit scores and requires new customer to provide financial statements for credit evaluation. 2. Credit terms and conditions. Specify the standard credit terms offered to customers, such as payment due dates, discounts for early payment, and penalties for late payment. Example, a software development firm establishes net 30 payment terms for all customers with an option for early payment discounts of 2% if paid within 10 days. 3. Credit limits. Outline the process for determining and adjusting credit limits based on customer risk assessments and payment history. Example, a wholesale distributor review customer credit limits annually based on financial performance and payment trends. 4. Monitoring and reporting. Describe procedures for monitoring customer credit balances, aging reports, and addressing overdue accounts. Include protocols for escalating collection efforts when necessary. Example, a retail chain implements weekly reviews of accounts receivable aging reports and assigns dedicated staff to follow up on overdue payments promptly. 5. Communication and documentation. Establish guidelines for communicating credit policies to customers and employees. Ensure that all credit-related decisions and agreements are documented clearly and accessible to relevant stakeholders. Example, a consulting firm updates its client contracts to include detailed information on payment terms, late fees, and consequences of non-payment. Creating your credit management procedure. 1. Credit application process. Develop a standardized credit application form that collects essential information from customers, such as business details, banking information, and trade references. 2. Credit review and approval process. Outline the steps involved in reviewing credit applications, including who is responsible for conducting credit checks, approving credit limits, and communicating decisions to customers. 3. Credit monitoring and collections. Detail procedures for monitoring customer accounts, reviewing aging reports, and initiating collection actions for overdue accounts. 4. Training and compliance. Provide guidelines for training employees involved in credit management on policy implementation, compliance with legal requirements, e.g. Fair Credit Reporting Act, and handling customer inquiries. Benefits of implementing a credit management policy. Risk mitigation. Reduce the risk of bad debts and financial losses by establishing clear criteria for credit assessments and limits. Improved cash flow. Ensure timely payments and minimize overdue accounts through structured monitoring and collection processes. Enhanced customer relationships. Build trust and transparency with customers by communicating clear credit terms and handling credit-related issues promptly and professionally. Conclusion. A well-crafted credit management policy and procedure guide is essential for any business looking to optimize its credit management practices. By defining clear guidelines, implementing effective procedures, and fostering a culture of compliance and accountability, businesses can mitigate risks, improve cash flow, and maintain strong customer relationships. Incorporate these templates and examples into your own credit management policy to streamline operations and ensure consistent, effective credit management across your organization. We hope this guide has provided valuable insights into developing a robust credit management policy and procedure guide for your business. For further assistance or customization of these templates, feel free to reach out to our team. Thank you for following our 3-part series on solid credit management practices.